Welcome to Key Stock and Crypto Channel.
And we have
NASDAQ starts. Crypto custody.
And guys, we know Jerome is in the house. Tomorrow he's going to be raising rates, probably about 75 basis points. Now we have Mike Novogratz says that Powell should stress hawkish stance against inflation. And we know Powell did that at Jackson Hole. But we also have Wells Fargo Michael Shoemaker says they might as well get it over and do 150 basis points. And we know over these next 4 months, we're at least moving up 150 basis points. And remember, all the central banks are raising rates together. And we've been on the longest expansion in history. It's about 12 years now. And it just ended the first quarter of this year. And I'm going to touch on that a little more later on in this video. Now we have the NASDAQ enters crypto custody, as my son King stated. And I've done videos on this channel and my crypto channel on how the NASDAQ was tokenizing stocks. And we're starting to see the two worlds collide, legacy and blockchain. And remember guys, everything's going to be tokenized and put on blockchain. And I don't care what it is. Now we have Netflix turns to ads. And this is going to be very profitable for them, but I feel like not in the immediate term. Because as 2023 and 2024 go on, we know a lot of people are going to start cutting back on their spending. And I still see them losing subscribers. Now we have Salesforce launches marketplace for carbon emission offsets. And we know part of Biden's Reduction Inflation Act used to be Build Back Better is all about the climate agenda. We know BlackRock is behind it. We know the Fed is behind it. And we know they control the money printer. And we see all the big corporations adjusting to ESG. Now that we're getting higher rates, what sector is going to benefit from higher rates? That's right. We know banks. And we know banks benefit from the free money. And banks are going to benefit from these higher rates. So, of course, we have Goldman Sachs, JP Morgan, American Express, Blackstone, and BlackRock. And guys, we know these banks are too big to fail. And something that all these banks have in common, that's right, they're invested in China. And speaking of investing in the emerging markets, of course, we have Vanguard, the Emerging Markets ETF. Now, we know when the stock market gets a major crash, all stocks take a beating. But there's a few that always seem to rise and keeps getting bigger and bigger. And the bank sector is one of them. Now, guys, we know Biden implemented that 15% tax on these big corporations. So we know layoffs are going to be looming. And over these next 2 years, we're going to be running into hard times. And the same way we went through the 2 years where everybody was getting free money and happy, these next 2 years, if you can grind through these next 2 years, you're going to be fine. And remember, the key is investing. And who has the biggest opportunity of growth? That's right, the emerging markets. In the United States, we're going to go 10 years with no growth. But if you're investing properly over in the emerging markets, where right now we have a strong dollar, so that makes a lot of their stocks very cheap. I'm not your financial advisor, not financial advice. Please do your own research. And lastly, we're going to go over the indicators. We had yield rates slightly up, and we know that hit the stock market. Dollar is as strong as it can get. We know that hit the stock market. And of course, the VIX was up. Guys, that's all I have for you. Have a wonderful day.
News release, Ira Auerbach, who used to run prime broker services at crypto exchange Gemini, has been tapped to lead the digital assets unit. The second largest stock exchange in the U.S. also expanded the technology it offers crypto companies aimed at detecting fraud and market abuse. NASDAQ's move into crypto follows a broader trend across Wall Street. Just last week, Citadel, Charles Schwab, and Fidelity announced they're teaming up to launch a new crypto exchange. Firms have been moving into the space despite the so-called crypto winter, which led to layoffs and losses for investors.
Facing, Steve, is the idea that the Fed's doing too much and that it's going to continue to do too much. It's a Sternlicht, it's Gundlach, it's It's others. It's the oversteering is the word that Gundlach used with me out where we were both out in California. What about that notion? How sensitive do you think the chair is to that?
I think he's sensitive to a point, Scott, but this is an interesting question, right? Which is, there has to be some pain, some softening. Some of the things that you've heard from people are exactly the things you would expect with a softening economy. And the question becomes, when do you sort of hit the panic button? When is it too much? I think Chair Powell expects to hear some of the things he's been hearing on our air regarding concern about going too far. And I would also expect that he would hear those most loudly from those in the real estate industry, maybe some in the auto industry. Basically, he would expect to hear from people in interest rate sensitive sectors.
Right.
He would also expect it to hear from guys in the stock market, right? Because they're the ones taking it on the chin. But looking at the broader economy, the idea that we have a forecast for 1.5% growth this quarter, I think he would think that's kind of a win for the broader economy, and he's hearing what he would expect to hear from certain people who are he would expect to have the most pain in this rate.
Well, it's interesting. Now that plays into this.
Well, I mean,
go ahead.
No. I mean, you know that story about the blind guys feeling the elephant, right? They all have a different piece of it, right? I'm not saying that Barry is that guy, but you know, he's in a particular industry that's going to take it really hard.
The other idea is how hard is Powell willing to let it go, right? That speaks to this Nick Timrose thing from the Journal, who said, and I'd love your opinion on this, Powell scrapped his original Jackson Hole speech and decided to deliver usually brief remarks with a simple message. The Fed would accept a recession as the price of inflation fighting. You've said that they may, in fact, be willing to do that. Is this becoming now more clear than it ever has, that he's willing to break it as long as he doesn't destroy it?
Yeah, that was my immediate analysis from the Jackson Hole speech when he used that phrase, pain. I guess he'd used it for the second time, but right now, in that speech, it stood out in bold relief. And it's why I keep asking him the question, and asked him twice at the last press conference. I may ask it again, Scott, I'm not really sure. But the question was, how does policy change if it is a recession? And he didn't really answer it last time. He didn't answer. Maybe he's ready to answer it now. But I think the answer is, it depends on how severe a recession is. I think if it's a mild recession, I don't think it changes very much, because I think the Federal Reserve, first of all, remember, Scott, they brought up that 1970s analogy where they talked about the idea that the Fed hiked rates and then stopped, right? And then inflation came back. They don't want to repeat that. That's one. The other side is that the Fed is willing to accept some increase in the unemployment rate, maybe a couple negative quarters of growth, and if they're mild negative quarters, I think and the result is it stamps out inflation, I think the Fed would count that as a win.
Yeah, we'll find out, I guess, as to